Are oil stocks really dead for 2020?
Yes, I think the market's obviously oversold. It's come down about $11.
17. The problem is there's only so much demand for oil, and governments around the world are trying to cut back on that demand.
Welcome back. You're watching this, you click on this video because of two main reasons. One, you hold a lot of oil stocks. And number two, the oil stocks looks really cheap just now. Low P ratio, looks affordable to buy now, or should not even touch it all. You came to the right place. My name is Alex Ko. I am the owner of this YouTube channel, Family Investments, for folks like you and me watching out for our family's wealth. So just to summarize, this video will be simplified into three parts. Why is the oil companies down? Likes of Shell, 63% year-on-year profit decline. ExxonMobil, they've smashed a target and they're still down. Three key reasons in Q1 2020 why these oil companies are down. So the first one is China and the coronavirus. And China's global demand of oil is about 13%. 13% of all the entire world's oil supply goes to China. So this demand will slow down. Factories are closing down, halting. This demand of oil will slow down, not just in China, but globally. So it will be oversupply of oil. And the coronavirus is just the beginning. And this cannot be contained. It's going to be a bit of a concern. That's why the sellers out there selling all the oil and decline of share prices because of oversupply. It's because oil is deemed as the next tobacco. Green. That's why Tesla is going up, solar panel companies are doing well, wind farming is being invested heavily. And the third one is the green initiatives. As we can see, the UK, BBC, all the roads in the UK will be all electric vehicles. You'll be grids everywhere that you can charge, point your cars. Electric vehicles will be everywhere, not just Tesla. EU climate law 2050 is net zero. So the whole EU is not just cars, but the carbon emission free. No more coal factories, no more emission, no more flaring. That's where they're going. So green initiative pushing the oil companies into a severe situation. Click on the link in the description to get WeBull account for 2 free stocks up to $1,400. Get another friend to join, you give you 2 more stocks for free. So the titles, existing holders, do not sell your major oil company shares. I repeat, do not sell your oil major companies shares just now. So there's 2 points in there. Major oil companies and do not sell. It doesn't mean buy. I said do not sell and major. Why? Major oil. Who do I class as major oil companies? BP, Shell, Total, ExxonMobil. You know, we've got Statoil or Equinor. All these are major oil companies paying dividends, steady dividends, buying back shares. I am not here to promote or asking you to hold all the smaller companies. You know, I'm not going to call names, but smaller companies who are buying old aging assets, service companies, Schlumberger, Halliburton, those will be affected because they rely heavily on the major oil companies. When cost cutting comes down, they'll be affected, but oil companies still wants to make their own profit. Okay, why do I say don't sell? But it's mainly due to strategic investment reasons. DRIP. DRIP. DRIP means dividend reinvestment plan. So when you buy oil companies, you buy for the dividends. You buy for the good dividend yield. Dividend yield gets reinvested. So when these oil companies are falling, when Shell is falling from the likes of 25 down to 18, down to 19, remember, they pay 4 times a year. So for the next quarterly dividend payout, your buyback of the shares will be worth $18 or $19. If they drop further to 15, maybe it's a bit alarming, 15, your automatic reinvestment will be buying shares at a price of 15. So you buy more shares on your reinvestment plan. So you'll be getting more free shares back into your portfolio, your holdings of your your companies. Reinvestor, I'm a dividend growth person. So in my dividend portfolio, all my oil stocks I'm holding, when it drops, it gets cheap, I'm getting cheap return of free stocks into my portfolio, and that's where it starts compounding. So don't panic and start selling. Think about it. Yes, we're going green initiative. Yes, we're going electric vehicles. It will take years before that happens. The world population is still growing. We still need to charge our phones. We're still building houses everywhere. We are demanding electric vehicles needs to be charged. It's not going to be charged by solar panel just now. It's going to be charged by the electricity from the national grid that's provided by the oil companies. Dividends, reinvestment is my reason for you oil existing oil company holders to hold, to hang in there, let it grow, let it grow. Dividend yields is key. You never find a better dividend yield than oil companies. So finally, on my third point, my third part of this video, what is the long-term plan? What is the long-term plan of your holdings of the oil companies? So firstly, I'd like to say is you have to diversify your portfolio. Do not just go 50, 60, 70% on just purely oil and commodities. That's wrong. Slowly diversify, start painting your portfolio a bit green, get a bit more electric vehicles, or maybe mining companies that mine mineral ores for electric vehicles, companies that support green initiatives, like for example Microsoft are going beyond zero in the next 5 years. They believe everything they produce will be beyond zero. Companies with green initiatives. So diversify their portfolio, paint it a bit green. And the second one, I spoke to lots of people. Do not hold more than 20% of oil. Start selling, but increase other areas like technology, pharmaceutical, consumers. Hold these oil companies who are slowly converting green, they're turning green, not turning into Hulk. No, not Hulk. I'm not talking about Hulk here. Look, Total, Shell, BP, they're starting to buy utilities company. They're starting to buy electric vehicle battery charging points companies. They're starting to go green, or they're trying to balance the portfolio of oil and renewable energy at the same time. So watch out for these companies. So as oil did in 2020, not for the major oil companies, not for your dividend reinvestment plan for your portfolio, and do diversify, as I say. So I hope this video is useful for you. I hope you find this informative to help you decide what you need to do next. If you've got any comments or any queries, leave a comment below. I'll be more than happy to share out my information that I know. So click subscribe, like, share this with people you know, and help me grow my channel at the same time. And this is my charity work for all of you. So let's get this family investment channel big. Thank you very much. Have a good day.